This is Brian Shannon from Alpha Trends Blogspot. It's Sunday, September 23rd, 2006, and we'll go ahead and take a look at some ideas for the upcoming week, see if we can isolate some opportunities where there's a good chance to make some money. I continue to believe that we are in a, at best, probably neutral market here over the next couple weeks or so, and that we're at a pretty critical juncture for the market overall. We're looking at the NASDAQ 100 Trust, the QQQQ on the screen right now. And, you know, we had that trend line break earlier in the year, a nice recovery from that. That acted as support again. But then what we've been looking at recently, in what I think is the significant area, is this prior resistance, which became support right in here late last year and early this year. And we're right back up to that level again, right at the area of the declining 200-day moving average. And we can see on the daily time frame here that 200-day moving average we did close below on the weekly basis again. So that, you know, it tells me that we're going to have to do some backing and filling in this area. And see if we can, you know, if the market can hold on to these gains, or if this is going to be a rejection at this important level, which is a 2/3 retracement of the year high to the year low, the 200-day moving average, and this prior level of support. So I think that if the market can hold up, that remains to be seen. But you know, right now I think the more important levels of support are probably down closer towards that $39 level. We've got, of course, that 20-day moving average that we're going to keep an eye on at 39.34 right now, and last week's low closing below that, I think, would bring about a bit further weakness in here. So again, we remain in a stock picker's environment. I continue to believe that the mid caps are really the area that concern me most. If you look at the longer term chart, and here I've got a chart, you know, 10-year chart of the mid caps, you can see that the mid caps have been the strongest area of this market over the last you know, 3-4 years, as you know, they made new highs in 2003. The NASDAQ hasn't done that. The S&P hasn't done that. The Dow hasn't made a new high. But these things were trading at all-time highs in 2003, 2004, 2005, most of 2006. And now it looks like they're breaking down. And when we look at this trend line that I've drawn in, you can see, again, the volume pattern in here is that it's been rallying on lighter volume for about 5-6 weeks in here, into this area of prior support, which looks like it's acting as resistance. We've got all these moving averages now declining. We've got the the 200-day or the 40-week moving average is now declining, and this recent volume, the last 2 weeks, has come with no further upside progress. Big volume without further upside progress tends to be distribution. So on the daily time frame, we've got this little trend line up in here, and you know, we're right on that 50-day moving average, which isn't good to see, you know, if that fails. But we also, you know, worse than that, I think, is the fact that it closed near the lows for the week and below this low right here from last Tuesday. So we remain in a tricky environment right now, and I think it's going to pay just to keep an eye on the stocks and take it one stock at a time. So let's go ahead and take a look at some ideas that hopefully can help us make some money here. First of all ideas that I'm going to mention here, you've got to decide for yourself whether or not you take them. There's risk involved in stocks. If you can't handle that, then, you know, I guess this is for educational purposes and informational and entertainment purposes only. Decide for yourself whether these ideas are appropriate or not. The NASDAQ Stock Market, symbol NDAQ, is the chart, first chart I want to look at here on the screen. And you can see that it broke past some resistance right here at about the $30.50 level. And that has acted as a little bit of support in here as well just recently. And that volume, you know, nice volume increase on that rally, low volume consolidation. So NDAQ looks bullish. A lot of the exchanges do. If you look at the New York Stock Exchange, NYX, great pattern in here. ISE, maybe not quite as bullish. I think it was the ICE, right? And the Intercontinental Exchange is the one that looked more bullish. That's the one I was thinking of. But anyways, going back to NDAQ, we've got a nice looking daily chart here. And we've got the 200-day moving average that could act as resistance, but that's up above $34 a share. So if we can just get to that area, that'd be fantastic. If we take this move to here, that's about a 3-point rally. So I think we can get a potential rally up towards about $33 will be our upside target. Here's how I'd like to get involved in this stock. I think that Friday, it was pretty much a nice uptrend all day. And we've still got a kind of a mixed picture from these moving averages. So what I'd like to see before I were to buy this stock is a move below $31 a share. So I want to see it pull back below $31 a share, and then I would buy it back as it gets back up above $31.10. After that, I would then place a stop at about $30.82. Down around this area somewhere, and again, I think the stock can make it up towards about $33 a share. So there's what I view to be a very good potential risk-reward ratio in NDAQ. SIMO, this is a stock we tried last week, I think on Friday, Silicon Motion Technology, and you can see on the weekly time frame that, in the monthly time frame that this was an IPO last year. It's held up well. The stock has seen a nice, volume move in here recently. It's holding up near these highs, and we were going to target these old highs up here at about 17.5 as far as a potential upside target. And the way I think we want to play this one now is above that 5-day moving average. So above 16.45, above $16.45. Then we would look for a rally up towards about 17.5, so about $1.05 of potential upside. And I would suggest a stop near about $16.20 once it gets above that level. So we'd be risking approximately 25 cents to make hopefully $1.05 or so. That's the way I'm looking at the risk-reward ratio in there. BRLC, this company is called Syntax-Brillian. No idea what these guys do, but that's not the point. The point is the stock on the daily time frame has a really nice pattern in here. It had been finding support along that 10-day moving average. Now it looks like it's finding some support along the 20-day moving average. And looking at a 10-minute time frame, we can see this recent pullback in here with these lower highs and lower lows all in here. Well, now it looks like maybe it's getting ready to move higher again. So what I want to do is I want to buy this stock above $4.40, not below Friday's high, because that's where most people are looking. I want to get a head start on those people, so I want to get it above $4.40 a share. Above $40 or $4.40, I would then put a stop at about $3.26, right down right about that area right there. And that's a risk of about 13 cents or so. And I'm sorry, 16 cents if we had a stop down at $4.26. That would be actually 14 cents. I was right the first time. Anyways, I think that would be able to, the stock, if it could hold above that, and make a higher low and break past that 440 level, I think we're in for a test of the $5 level. I'm not looking for, a massive move, but on a risk-reward basis, again, to risk 16 cents for the potential opportunity to make 60 cents, I think makes sense. So BRLC is the symbol for that one. I'm going to look at two short sale ideas. First one is Aspen Technology, symbol AZPN, and as you know, we've tried entering this a couple times last week, maybe 2 or 3 times, but it never gave us the real reason to. But I think the stock is making this bigger top in here, and it came down on big volume. It rallied back up to that declining 50-day moving average. Now on the 10-minute time frame, you can see that it's starting to look like it's breaking down a little bit here. What I'd like to see first, before getting short this stock, would be a rally up to $11.35, and then to short it below $11.25. So only sell it short. This is my way of doing it, is I'm only going to consider selling this stock short below $11.25 if it trades above $11.35 first. I'd like to see it go up there, trap some longs in, and then they spit it out and the stock fails. I think you could see this stock down towards about $10 a share based on where it's been here in the recent past. And you can see here that this little pattern of higher lows was interrupted Friday. So if we get just a little bit move higher, make a lower high, then I think it could fail nicely. And I'm looking for a target down near about $10 a share, like I said. And once we get in below that $11.25 level, I think you put your stop above this 5-day moving average at about $11.52 for AZPN. Last one I'm going to mention is Century Aluminum, symbol CENX. You can see here that this is a pretty bearish looking daily pattern. I think we could see the stock come back down and maybe test that 30 to 31 level. This low right here is just under 30 bucks a share. I'm going to say our target is 31 just to be conservative, but it could I think work out a little bit better than that. Here's a 5-minute time frame that I'm looking at right now, and you can see that it started to make a little bit of a rally here late in the day Friday, which is nice. So we don't have to necessarily wait for a rally before we short it. What I'd like to do instead is to sell the stock short below this low right here. This is 32.27. Below 32.27, I want to sell the stock short. I'll then put my stop up about 32.75 or so. And so that's a risk of about 50 cents. And I think that, again, the stock can drop down towards 30.31. Officially, I'm going to say my target's 31. That would give us about $1.25 of potential profit for about 50 cents of risk. Almost a 1 to 3 risk, about 1 to 2.5. So that's going to do it for now. Check back Monday afternoon, and I'll give you my thoughts about where we are with the market. Thanks for listening.